Hi everyone! Welcome to UTrade Rundown. I'm Jeri Alfonso, the Consumer and Gaming Analyst at Unicapital Securities, and today we will talk about RRHI's voluntary delisting. Last week, RRHI's Board of Directors gave the green light for a voluntary delisting from the PSE as Jeri Holdings plans to make a tender offer for all remaining shares at 48.30 pesos each. That's a 32% premium over the stock's one-year VWAP and 24% above its last traded price before the announcement. However, it is 17% below its IPO price of 58 pesos per share back in 2013. The official delisting date hasn't been scheduled yet, as the proposal will be decided at the annual stockholders meeting on May 12. For a brief background on the bidder, Jeri Holdings is the Gokongwei family's private investment arm, with Lance Gokongwei acting as the chairman and president. With the upcoming departure of RRHI as well as ATI in April, the PSE will record a total of 12 delistings since 2023, exceeding the 7 IPOs the board has welcomed over the same period. Now, why is it going private? The decision to take RRHI private raises questions, and there are a few possible scenarios behind it. One likely explanation is that the Gokongwei family, who owns Jeri Holdings, simply believes that RRHI is underappreciated by the market. Since the company's value isn't being fully recognized by investors, there is little incentive to continue shouldering the regulatory burdens, compliance requirements, and paperwork of being publicly listed. Aside from that, we do think macro factors may have also contributed to the decision. Rising oil prices from the Iran conflict could increase costs and temper consumer spending, which are factors that may put additional pressure on the stock. The Gokongweis may be anticipating further downward pressure on RRHI stock, making this a timely opportunity to delist to protect the company from external volatility. Other scenarios, though less likely, are also possible. Jeri Holdings could consider a PSE listing itself in the future, or a publicly listed company might acquire a stake in Jeri Holdings. In such a case, consolidating RRHI under Jeri Holdings beforehand could simplify the ownership structure. We think the tender price could still move higher, as the upside potential of RRHI may not be fully reflected in the tender price. In our view, the offer price should at least be in line with the company's IPO price, which we consider a more reasonable benchmark for shareholders. From a technical perspective, for the tender offer to be formally rejected, at least 6% of shareholders would need to decline the offer. However, there are practical considerations for those who choose not to participate. Should the majority tenders, non-tendering shareholders may face administrative and tax-related complexities in the future. Selling shares outside the tender could require finding a buyer independently, paying higher capital gains taxes, and covering additional fees. And that's it for this week's UTrade Rundown. For more company deep dives, open a UTrade account today.